Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast. And I have a returning guest who was on the show 5 years ago, which was back in December 2019, episode 55. So please go back and listen to that episode after listening to this podcast episode. Martin Horgan, who's formerly the CEO of Centamin, a gold producer with an operation in Egypt, who have recently been acquired by Anglo Gold Ashanti as of 22nd of November. A mine engineer by background, Martin has over 30 years experience in the industry, working in the field, working in consultancy, and also working on the banking side of things before starting his own company, Toro Gold, before selling this to Resolute. For the past 4 years, he's been at the helm of Centamin, transforming the company and its flagship operation, Sukari, to what it is today. Martin's going to take us through his career, his journey, what he's been up to, and obviously talk about the more recent success with Centamin and what he did to change the fortunes of the business to what it is today, and obviously the recent takeover. So, Martin, welcome back to the podcast. How are you?
I'm all right, mate. Rob, glad to be and happy to be back here. So, as you say, 5 years almost to the date when we last spoke. Bit of water under the bridge and a bit more grey hair, but lovely to speak to you again, mate. Yeah,
great. So, just wondered if obviously you can just tell us a little bit about your career, about your background. Obviously, I just mentioned briefly in the introduction, and then obviously we'll speak more about Centamin after that.
No problem at all. Thanks, Rob. So, I took mining engineering at Leeds, 92 to 95. It wasn't my first choice of career, to be honest with you. It was fell into it a little bit by accident, but really enjoyed the course. And then basically graduated in 95, and at which point Goldfields were recruiting the old milk round out of South Africa. And I joined Goldfields on the graduate program straight from university. Did a couple of years for Goldfields, working at East Driefontein 2 shaft. Did a little bit of time up at Namibia at the Tsumeb mine, and really did a little bit of production and a bit of graduate work there as well. So kind of, a little bit of dirt under my fingernails in the deep level gold mining space. From there, I then joined Stefan Robertson and Kirsten, SRK, working in a combination of their Johannesburg but primarily Cardiff offices. And actually, despite being a mining engineer, I worked in the resources team with Dr. Mike Armitage. And the usual sort of work you do at SRK, study work, pre-fees, feasibility, resource reserve work, and then quite a bit of audit work with the connection to the city from Cardiff. So around equity stories, due diligence, but also quite a bit of bank engagement as well. And through that process in late 98 to 99, SRK was retained to work on the Ashanti Goldfields restructuring. As older listeners might remember, the hedge fund crisis. Worked for SRK as we were part of the broader group that looked at the restructuring and rescue package. Some pretty high profile people came out of that. Venkat obviously was parachuted in there. Mark Arneson of Moto Goldfields, Varshan Gokul, and a whole group of people as well. Did that for SRK, and through that process met the banks. Joined Barclays Capital in 2000. Continued to work on the Ashanti restructuring, but from the banking side, but then did 6 years investment banking with Barclays Capital here in London. Barclays at that point was probably a debt and advisory house, didn't have an equity capability, but had a worked on a global mandate around some more of the structured work, project finance, some of the commodity trading and due diligence, and got quite into the ESG space as Barclays was an early adopter of the Equator Principles. So did that to 2006, had a great time, then moved back into industry. I joined an AIM-listed business called BDI Mining, which had a diamond production in Indonesia and a small gold project in PNG. Managed to get involved, and over the space of 18 months, we doubled the share price. And then Clifford Elphick of Gem Diamonds, who were newly listed, acquired the business in an all-cash transaction in 2008. From that, an ex-colleague from SRK, who's an exploration geologist, Howard Bills, he and I put the bones together of an idea post GFC. Things were hard, and certainly, for exploration companies, they're even harder. But we felt that actually that sort of presented a window of opportunity that would allow us to, with a little bit of cash, the land of the blind, the man with one eye is king. And we took the idea that actually, with Howard's sort of track record had been Samax and Axmin, that actually with a little bit of cash, it was a good time to leverage ourselves into a fairly sort of tough industry. So we set a thing called Toro Gold up in April 2009, built an exploration portfolio across West and a little bit in East Africa, we're in Sudan, but predominantly focused on West Africa. And through that process, made the discovery of a greenfields project called Mako in eastern Senegal. And we took that from first principles of literally a soil sample all the way through into production in 2018. It remained a private entity, private business. We never listed it. Private equity backed, and then about a year after production, Resolute acquired us in 2019 in about a $350 million transaction. So I think that's when we last spoke, December. I was taking a little bit of time off. I was happily and gainfully unemployed at that point. And then Centamin came knocking in late 2019 for the vacant CEO position. At about that time, Endeavour had been sort of flirting with Centamin, and that's sort of a bit of a hiatus with the engagement, but with the Centamin Endeavour engagement falling away, re-engaged during the first quarter and accepted the job on around about the 5th of April 2020, which was an interesting time to join a business as CEO just as COVID was emerging, and it kind of precluded anybody from sort of flying and moving around as well. So quite the baptism of fire into Centamin. So look, I guess sort of a varied career of operations, consulting, banking, and then sort of executive on the company side, and been involved with everything from greenfields exploration, feasibility work into construction and ramp up and operations, and then more recently a bit of a turnaround at Centamin as well. So a broad but shallow knowledge base, I would say, of the sector.
Yeah. Before we speak about Centamin, I want to talk about obviously Toro Gold, and you were with them for over a decade, obviously operating in West Africa. And whilst Centamin saw you working in Egypt, which brings obviously its own set of opportunities, but obviously challenges, what advice would you give to companies operating in riskier jurisdictions with often complex regulatory environments? And obviously, at the recording of this, we have seen certain issues happening in Mali with Resolute. So yeah, I just wondered if you can just tell us a little bit about some, and I suppose provide a little bit of advice of what you would see as certain opportunities, but challenges as well, working in West Africa and I suppose other neighbouring African countries.
Yeah. Look, I mean, I was very fortunate, as you say. We started in Senegal in sort of 2009-10, and I think that when I look back to that period, West Africa was in the throes of a real sort of boom. There was obviously Ghana back in the 90s sort of led the way. Mali emerged not long thereafter. And you saw that sort of, real sort of energization of the West African sector. Senegal came to the party a little bit later. Côte d'Ivoire, post-Civil War, has been a real engine since then. And of course, Burkina Faso became a real hotbed of exploration activity and success. So I think, when I was, sort of first starting in West Africa, or in fact, my sort of full time in West Africa in reality, is that, we caught it on a wave of enthusiasm, of optimism around West Africa. And that was backed up by a significant amount of exploration success leading to sort of operational success as well. So I think we were working in a much more conducive and supportive environment. And I mean that not just from a sort of regulatory or local government perspective, but I think, market sentiment was very sort of, well disposed towards West Africa as well. So I think, we had the best of it in terms of my time there, certainly, my engagement down there. I think that, what it tells you is that when you look at the recent travails in certainly Mali and Burkina and Niger as well, is that mining projects are multi-decade sort of opportunities, from that first exploration phase to a discovery, into a build and operation, and then say with at least a 10-year life, you're looking at least maybe sort of 20 years between exploration, build and operation. And obviously some of these bigger operations can be multi-decade, sort of 20, 30, 40 years effectively. So on that basis, it's very hard to make, decisions around sort of long-term investment horizons on that type of scale. versus, what can happen. And I think the thing that sort of surprised me within the West African sphere is that it was the rate of change. Is that, places like Mali and Burkina, which were considered to be sort of, stable, attractive, prospective jurisdictions that had good discoveries and more to come. It's how quickly it changed as well. And I think it was that rate of change that surprised me, and I suppose others as well. And it's how do you sort of, once you're embedded there, once you're exploring and you've got some success or operating, it's very hard to sort of move out of those jurisdictions as the political and security landscape changes as well. So I think that was one thing that took me personally by surprise over the last few years as to how quickly things fallen over or fallen off a cliff edge there. You've seen other countries, I'm not going to talk about specifics, but that over a period of time have become sort of gradual, sort of managed decline. The UK probably, I would say. But anyway, by the by, not for this political conversation, but you can sort of see a long-term trend of things moving. But I think it was the sharp change in West Africa that surprised me. I think what holds true in any jurisdiction is that you've got to have good stakeholder engagement. That's local communities, regional authorities, and of course national authorities as well. And I think that if you can have those relationships, that does to an extent try and ensure you and inure you from changes. But of course, when you've moved from a democratic government to a military junta, it's quite hard to who do you engage with, and it would appear the usual sort of rules of engagement sort of get thrown out the window, as we've seen recently in Mali, as you mentioned as well. So look, I think having not had to work in that type of environment, thankfully, I think probably the rules would be the same of broad-based stakeholder support at a local, regional, and national level. Lots of dialogue, lots of engagement. Really understand, try and be empathetic and understand it as best you can, which is not always possible, both sides or the multi-faceted side of the story, and then try and sort of navigate. And I think communication's key as well. No, I can honestly say that I did have I felt I had the best of West Africa, certainly on a more broad basis, both locally and internationally, with sort of investor support as well. But a difficult environment now, and it's going to be interesting to see how it unfolds, how investor sentiment and money sort of retains its interest in those areas, or will money find homes to go to or jurisdictions to go to that are probably more attractive on a sort of risk-return basis as they look at sort of the investment opportunity.
When you obviously started out at Centamin, the company was obviously a lot different to what it is today. I just wondering if you just talk us through some of the changes you implemented and obviously decisions that you had to make being the CEO, and how you actually got those people on board with the decisions that you made.
Sure. Look, I think, when you look at the history of Centamin going all the way back to the 90s when sort of the original founders of the business were, back in Egypt looking to try and develop the sector, I sort of think about that journey to get it to a point of a mining concession, the mining license which governs Sukari. Then you've got to think about moving through the political turmoil, then to actually get the thing up and built and operating successfully, then into an expansionary phase with a consistent period of great production. Is that it's an amazing story, and the sort of the perseverance and dedication to get that was phenomenal, quite frankly. I mean, I walked that walk in Senegal, but not nearly with as many challenges as I understand happened in the early sort of Centamin days. I think then it clearly had a couple of 3 years of sort of misfiring around production. I think that led to sort of questions around sort of had the asset seen its best days? What were the issues? Were they fundamentally flawed? What's the situation at Sukari? So I think I walked into sounds like it took me by surprise. I think I joined the business, understanding that there's a world-class ore body there for sure, and that hadn't changed, and there's lots to come and still lots to do around that ore body. I think there was a good team of people, both operationally and corporate. I think for whatever reason, sort of my predecessor, sort of, there'd been it's hard for me to talk to Rob because I wasn't in the room, but certainly in terms of the mining plan and execution, there was some decision taken historically for whatever reason that led to a lack of operational flexibility within the mine site. And I think that lack of operational flexibility then led to sort of, things happen in mining all the time in production cycles, and you need that flexibility. You've got an issue here, you move your equipment here, and you keep the thing moving forward. Certainly in a single asset business when you don't have a portfolio. And I think that lack of operational flexibility led to some sort of, production issues and guidance issues. And I think that kind of knocked the confidence a little bit from an investor sentiment. So really, I joined a business with a great ore body, with a good team that had a bit of a tough time for the previous couple of years. But really the bones of something that was was not fundamentally broken or flawed. It was about sort of, to my mind, there's a couple of things that I wanted to look at. First and foremost, to me, the whole sector is always about people. And I think if you get the right people in place and you put the right environment in place for them, and in terms of that working environment, and support them to do the right work, that's what drives, success, to my mind. Ore bodies are ore bodies. You can take an average ore body and a great team of people will basically make some good money out of it. You can take a world-class ore body and the wrong people basically won't make a cent from it as well. So I think first and foremost was understanding what was in Centamin from a people perspective, identifying gaps in the management structure. Someone many years ago said to me, when it came to corporate overheads, that skinny is good, but not to the point of anorexia. And I think sort of, Centamin was a little bit sort of spread thin from a sort of management sort of perspective. So it was about putting some sort of additional resource in key areas to support the business. Things like geology, I felt that was a key area of focus. Actually turned out to be a key area of opportunity, which was one of the good outcomes. And then really thinking about, with these large scale long-term assets, it is that really, you have to manage them, for the long term. So what you've got to understand is, what's the full life of mine look like as a plan, and then have that drive short-term, 1 to 3 year budgets effectively as well. So it was about basically moving back to that kind of the long-term driving the short-term as an outcome. And then really making sure that we were doing that using best information, best data. And if we could then get the right information at a data level, the geological model, the geotech, operational information, the right people doing, to my mind, the right planning strategy of long-term driving short-term, then you kind of sort of started to move. And that really was what 2020 was all about, was to understand where were the areas of vulnerability, where were the areas that were also of opportunity, put the team in place to then do that work, understand sort of all the opportunities, and then start methodically over 21, 22, 23 and 24 to address those issues. One of my fellow directors at Centamin, an African mining engineer called Henny Fal, he and I were chatting back in 2020. You sort of sit there with this large job. How do you turn around this super tanker, with all the inertia and all the issues, and lots of multifaceted sort of interconnected issues that you needed to deal with. And he sort of said, just never forget the old African proverb, which is, how do you eat an elephant? And the answer is piece by piece. And I think, that sort of philosophy of breaking down the operations into their constituent parts, understanding them, optimizing them, and then putting them back together, recognizing how they all flow together, was the approach that we took. And I really sort of think that there was almost two parallel work streams within Centamin, certainly at Sukari. So one was addressing sort of vulnerabilities in the asset and how do we fix that and get it back on an even keel. And then the other sort of work stream in parallel, and of course they're intrinsically, they're not separately, is what are the opportunities? With a fresh set of eyes, with a clean slate, what are the opportunities that can be delivered? And we did lots of things, solar farm, contract mining in the underground, lightweight truck drivers, any number of different initiatives. So there was kind of two parallel work streams of kind of sort of, I won't say fixing, but sort of looking to identify and sort of, address vulnerabilities, as well as then optimizing off that base as well. So it all sounds quite simple in sort of 4.5 years later, but doing that through COVID was quite a challenge initially. But really, I think if you put the right team in place, you back them, and you understand the business, then I think that's that you've got to trust the process. I sound like a Premier League football manager. As a United fan, I sound like Ten Hag or Van Gaal or Mourinho before that. We've had a succession of those recently, but you genuinely got to trust the process, which I'm hoping for all with Amarim, but that's another story altogether. We'll see how this ages 5 years from now when he's been sacked in about 6 months. But anyway, but you've got to do that. You've got to trust the process, and I think you've got to communicate that internally to the team, to the board. And then importantly, you've got to communicate that externally to those stakeholders, the government partners, our investors in London and internationally as well. And then you've got to deliver into it. So, yeah, look, I think it was a number of factors in there. But ultimately, I think, as the transaction AGA showed, I think we got that right and started to really demonstrate the potential of Sukari.
Yeah. Well, I'm a Spurs fan, so hopefully we're trusting the process with Ange.
Yeah, there were lots of people who were Spurs fans last Saturday, but we'll leave that there.
Yeah. Just moving on from what you said, can you highlight some of the operational advancements that you implemented at the mine. And how have obviously some of these innovations not obviously only improved safety, efficiency, sustainability, but also contributed to strengthening relationships with the local communities.
Yeah, yeah. So look, I think the first real focus for us, or when I joined, was geology, and it really is the cornerstone of everything that we do in mining. And as I say that unashamedly as a mining engineer, it's, you don't get the geology right, then everything, well, nothing follows from there. And my initial sort of thesis was that a better understanding of the Sukari geology would lead to better mine planning, which would lead to better execution, and therefore better confidence that the company can deliver. So really, brought two people in. My former colleague from Toro, Howard Bills, joined on the exploration side, and we brought an ore body geologist, an Australian by the name of Craig Barker. And really, I gave them sort of, we talked about what we wanted to achieve as the outcome from where we were and where we wanted to be, and then sort of gave them that sort of support to effectively almost sort of start again from scratch. And Craig on the geological side at Sukari effectively relogged the entire ore body, brought a team in with him, pulled all the old drill core, and did a full relog and full reinterpretation. And as I say, that certainly did lead to better planning and better execution. But what it really did then is it really showed the potential of Sukari, that sort of, Sukari had been on a strategy of effectively replacing ounces as they were depleted in the underground. So there's a kind of rolling 3 to 4 year life. We decided to try and accelerate that. And in that sort of first flush, we went from a 400,000 ounce underground reserve to a 1 million ounce reserve in the underground with further upside potential. So in itself, discovering those additional ounces or proving up, they were there, proving up those additional ounces, bring them into the reserve category, hugely value generative from a market perspective. But then it unlocked a number of other opportunities. So we were quite lucky that the mining contract, the underground mining contract, open pit was owner operated. That was also due up for renewal. And now that you've got an 8, 9, 10-year life ahead of you, you can start to make some more strategic decisions. When you've got a 3 to 4 year life ahead of you, it's quite hard to go to the board and motivate to buy equipment that's got a 7, 8 year operational life when you've got a 3 year mine life. So now we were able to basically say, okay, well, look, we've now got the legs on the underground. We can certainly look at contract mining, but can we look at owner mining? And ultimately, we made the decision to go owner mining. And that saved us a huge amount of money in terms of just, OPEX. But then with an owner mining sort of opportunity, then we could look at expansion because you weren't locked into contractual terms. And that allowed us then to sort of, with that increased reserve, with the owner mining flexibility, that allowed us then to push on. And I think the sort of the stark example is that when I joined in 2020, the contractor was pulling about 600,000 tonnes of ore to surface annually. And this year, the mine's planning to do about 1.1 million tonnes of ore. So almost doubling the underground capacity within that period as well. So, you get the geology, you try and address the geology in a sort of defensive manner to get it right. It ends up being one of the areas of most opportunity. So great, you find the ounces, but it then unlocks that owner mining opportunity and that expansion opportunity as well. Combine that then with putting a paste fill plant in, which, makes better geotech, better safety, better ventilation, and better extraction as well, is that, that underground really did transform from where it was operationally to where it is now. And of course, a great move in terms of safety stats as well. So it's things like that sort of, that you roll through and sort of, one opportunity leads to the next. Elsewhere, the solar farm, I think a huge success, 36 megawatt DC farm, 30 megawatts AC, saves about 20 million litres of diesel a year, about 60,000 tonnes of carbon equivalent, a real huge sort of, operational win in terms of OPEX, but from a sort of ESG perspective, huge reduction in carbon emissions as well. And we did continue to work on that just up until the point of leaving, and I'm sure AJ will continue this now. There's the opportunity for solar farm expansion, connection to the national grid that's got renewables, and really looking to sort of, decarbonise that operation as well. So, there's some of the operational highlights, and there's a number of, we did a couple of other things around the edges, gender diversity. I think I'd never worked in Egypt before until I got there. I've grown really fond of the place over the last sort of 4.5 years. It was my sort of, it's Africa because it's on the continent, but it's not really. It's also Greek, Turkish, Mediterranean, but it's also Middle Eastern Arabic. So it's this real, and then you've got kind of Coptic Christian sort of in there as well. So it's this real melange, and it's quite an amazing place. All these different sort of cultural sort of touch points within there. Astonishing history. People were studying ancient Egyptian pharaonic history at the time the pharaohs were still there. I mean, the time of the pharaohs was so long. It's amazing. And you go there, and there's There's 105 million people. They live on 5% of the land. It's quite astonishing, really. High levels of tertiary education, quite a young demographic within the country. Egypt exports a lot of talent to Middle East and North America and repatriation of funds home. But, we found a very engaged workforce that was hungry to learn. That was supported by a government that's pro-mining. It really wants the sector. It's small in comparison to oil and gas, but the government wants it. But, with that sort of youthful workforce there, the law was allowed female participation in most but not all areas of the mining sector, of the mining operations. And we took the decision to push gender diversity. It was a bit of a leap, to be honest with you. I thought it was going to be okay, but you're never quite sure. And I think it was a huge success, and certainly has been to date. With a mature operation, you have to wait for people to leave and vacancies to come up to be able to. You can't just start sacking people and replacing them. So you've got to wait for that sort of wasting. But we went from 0 to in excess of 50 female professional employees at Sukari in a couple of years. And that's within a workforce of over 3,000. So on that percentage, but it's just that in the initial it's moving now, it's continuing. Really well received by the workforce. I think a real change for good down there. Really important for us is that it's not domestic cleaning staff or kitchen support. These are professionals in geology, ESG, administration services as well. So I think that demonstration of gender diversity within Egypt, I said, was a real big plus. And when we've had various ministers visit over the years, they were delighted and thrilled around that. So yeah, look, lots of operational changes, lots of improvements around that operational side. Good cost savings, real focus. We took a lot of costs out of the business over the last 3 or 4 years. But then some of those softer issues around, or probably harder issues around gender diversity, you kind of look back on and think, yeah, that's pretty cool to have been involved with that.
Talking about ESG, and I know it's obviously a passion of yours, you obviously launched the company's decarbonisation roadmap. Was this primarily driven by investor pressure, or did it stem from, a broader strategic vision for Centamin?
Sure. Look, I think it's a bit of both, to be honest with you. I think, as I mentioned before at the start there, when I was at Barclays was one of the early adopters of the Equator Principles. And as the kind of the technical monkey in the mining team, I was allocated to go and work on that. And it was fascinating. I really enjoyed it. And it was that recognition that, if you work in the mining sector, you kind of understand this already, is that, mining is absolutely vital to modern life in terms of everything we do and touch is involved with mining. And I think, you go to places where mining has been done, correctly, respectfully and collaboratively, and you can see huge benefits of the mining sector to local communities, to host nations, to public treasury. Done poorly, and that concept of the resource curse is all too real. So for me, mining's essential. We all know that. So if you're going to have to mine, let's do it properly. So that's kind of, for me, that's kind of a moral imperative. That's how I, just personally feel about the sector. And I think, being involved with Barclays at the Equator Principles was really set the tone for me. Moving on to Toro, we were, in an area that was adjacent to a World Heritage National Park, the Near-Kolokoba Park. We did the baseline survey. It had chimpanzee, red list animals. And we were next to the Gambia River, which was an international riverway that ran from Guinea to Senegal to the Gambia. So in terms of environmental, it was about as challenge as you could get. And I think, worked with some amazing people in terms of, ESG team, Paul Cannon, who was with me at Toro and came to Centamin, a chap called Glenn Armstrong, who's ex-IFC, a British chap as well. At Toro, we took the view that far than the mine from being a threat to the park, the mine could actually be a benefit to the park. And we started off with some pretty heavy UNESCO criticism in Toro, but by the end of the engagement process, Toro was actually presented at a UNESCO World Heritage Conference about how projects can be done in harmony with World Heritage sites for benefit. And we brought a group called Pantera in. We helped work with them to look at big animal conservation applied to Near-Kolokoba Park. We funded that as part from the proceeds from the mining operation. And I found out about 3 or 4 months ago that the Near-Kolokoba Park in Senegal now has been removed from the endangered watch list from UNESCO. And I can think that part of that was the work that Pantera did, and Pantera there because Toro took them there and funded that initial work as well. So I think, mining done properly, there's just one example of being done properly. So I kind of fundamentally believe that, that's my ethos on it. Walking into Centamin, already well disposed around that. I brought Paul across, from Toro with me, and he got involved with that. So that was kind of the basic thinking. We have to do it because we should do it. Then, of course, I've gone from a private environment in Toro into a publicly listed environment in Centamin, and I think you're right. There is now investor sort of expectation that companies will act the right way, and then they will fully disclose about how they act as well. So really, we did that part in response because it's the right thing to do, and part in response because it's now an expectation, quite rightly, that markets want people to do these things.
Yeah, and obviously ESG's spoken about a lot, and it's obviously critical focus for the mining industry. Do you think there could be a risk of losing momentum with ESG, and do you think it could be a bit of a passing trend? And as you mentioned, ESG has been at the forefront, I suppose, of mining for long enough, but it hasn't necessarily been a brand that has been a focus for the mining industry. But I suppose if you spoke to anyone 20, 30 years ago, they were doing all the aspects of ESG to the best of their ability.
Yeah. Look, I would say that there's almost another trend here that sort of I look at my kids and sort of people in their sort of 20s and 30s, and I think that sort of when you look at that, there's a much more heightened awareness now of our environment and societal expectations about what is the right and the wrong thing to do, and mining really has to sort of respond to that and start to demonstrate that it isn't this sort of bad faith, dirty old historical industry that sort of pollutes and sort of takes land off people and sort of acts as this sort of arch evil capitalist sort of industry that sort of this kind of slightly hackneyed approach there as well. So I think as I said, mining is essential to everything that we do. There's now a lot more of a social awareness about it, things provenance of where things come from. Historically people love their iPhone. Oh, isn't it great? But all those wonderful sort of rare earths and minerals and metals that are in there, where do they come from? How have they been extracted? How have they made it into the supply chain for my product here? And I think that trend is only going to increase as well. And I think it will be an incumbent on manufacturers to start talking about provenance of their products, and therefore on the supply chain that will have to go back to mining as well. So I don't think it will. Well, I don't believe it will stall because I don't think society will let it. And mining is such a crucial part in the supply chain that it's going to have to continue on that journey and demonstrate how it's playing its part in decarbonisation. And then, of course, mining is also a huge driver of decarbonisation when we think about critical minerals, battery metals, all the things that we need to effectively the building blocks of a decarbonisation global strategy, is that mining is going to supply all the majority of the raw materials for that as well. So I think it's ingrained in the sector now. Certainly, I think all Western producers think very carefully about it. They understand their responsibilities. I think the cell phone has been an amazing sort of tool that you can be in the middle of Africa, the middle of South America. You can be in some pretty remote places, but with a 3G mast around the corner, if you're not acting in the right way, that can be a global story very, very quickly as well. So there's no place to hide as well. So no, I think that generally the 99 point whatever percent of mining executives believe in it. They're committed to it. They're doing the right thing because they think it's the right thing to do. Their investors and their stakeholders expect it to be that way, and I think broader society needs it to be that way as well. So you're always going to get the odd bad faith actor that doesn't do the right thing. But I think generally, I think it's more been as you say, a marketing effort by the sector that needs to do more to demonstrate. And it then flows on to the final thing, which is a bit of a hobby horse of mine, is that if we want to attract and retain young talent into the sector, that next generation coming through there, we've got to sell the sector as this essential engine of decarbonisation and growth. And if we want that talent to come and work and be those next band of leaders to take on the baton and take the sector forward, we need to be able to attract them and motivate them to do that. And yes, salary is one thing, but also I think it's important that people understand if they feel that they're getting well paid to do something that's important and contributing to society, I think that's also very important to young people as well. So we've got to make sure that we get that right and sell that story.
Yeah, that brings nicely on to my next question. And having previously recruited for Centamin before you joined, there was quite a lot of turnover. How did you sort of ensure that Centamin obviously attracted and also then retained some of the top talent, and particularly in such a competitive and evolving industry?
Massive salaries, Rob.
Yeah.
No.
That's the solution.
No. But actually, what the real sweet spot is that you find those professionals that have got a genuine passion for what they do. And if you can identify those individuals, yes, that they want to get paid, but actually, if you identify those types of individuals, and then you put them in the right environment where we say, like, we're going to do things the right way. We're going to basically, and that's not to denigrate what happened before, just to be clear, this is just my ethos, is that we're going to do things this way. We're going to do them properly bottom up. We're going to do it from a technical correctness perspective, and we're going to get those results. And if we get success, we'll share in that success as we go forward. So I think if you can do that, if you can sort of foster that environment, then I think that's what really then sort of gets you the best people to come in and then the best people to stay. And I think that was kind of one of the great successes of Toro was that sort of the work environment we fostered there during the sort of, the phases of exploration to build to operations, is bringing that ethos across into Centamin of respect, of professionalism, of support, and if I'm honest with you, doing it with a bit of a smile on your face. It's a hard business at times, and there's long hours and difficult conditions away from home. And I think one of the things I've tried to do as well is that you do it with a certain light touch and air of sort of of enjoyment around it, and take the wins when they come and enjoy them. Don't get too heartened by the downside, and then understand and move forward. So if you can create that environment, then you basically, that's what I think really motivates and retains good quality people. Again, a bit of a sporting cliche is that it's very easy to be good when things are going well. I think the real test of a team is when you basically face adversity, and how you bind that together is that really is sort of shows the mettle of a team. And I think Centamin, as I joined in 2020, we had this sort of, lots of change. I'm new CEO coming in, new ideas, new change, different ways to do things. So that's always, unsettling for people. Then throw COVID over the top of that. And I think that sort of 2020, 2021 period, was particularly challenging. But I think, perversely, when I look back on it, is that sort of 12, 18-month challenge, it was hard. And it was certainly hard yards. And a lot more grey in my beard than when I started. But actually, I think that crucible of that time almost sort of forged that sort of camaraderie, that spirit that I think sort of moves on today. And I think was recognised by AGA that when they turned up, they saw a good site and good people. So yeah, I think it's that sort of team ethic, that focus on that. I think that is what's really important to try and get and retain the best if you can.
Yeah. If we look at more current at present, obviously Centamin officially was acquired by Anglo Gold only last week or the week before. Obviously, your time at Toro Gold saw you, the company be obviously acquired by Resolute back in 2019. What are some of the key lessons that you've learned steering this ship during two major transactions?
There we go. Very philosophical for a Wednesday morning, Rob. Maybe this should be a 10 p.m. Friday night conversation. Look, I think both at Toro and at Centamin, we never set out to sell the business. The idea was to run the business as best we could and try and maximise the sort of the value of the assets, and by doing the right thing and doing good quality work. And I think if you're focused on that, if that's your kind of primary driver, then that does a couple of things for you. And if you end up in a transactional phase, is that if you're doing the sort of high quality work, it means that you've got a really good data room. And if someone does knock on the door, two things happen. One, if they get to look at the data, is that there's a really solid base of data there that they can't start to say, oh, this is a problem or that's a problem, or we've got a different view on here, we're going to have to knock 10% off the price. It is that when you present that data, it really is robust and solid. And there's always going to be challenges, but it's maybe on the edges 1 or 2%. It's not a fundamental flaw in the business because you've done the work correctly from first principles, and you feel very strongly that you can stand behind that work and sort of be there. And I think that's kind of one of the things that my career has allowed me to do. I've been in sort of consulting and banking and operations, and through these various phases, is that I know enough to be dangerous, I think is probably the way to put it. And so when you're in a conversation, is that, we think the resource is that. We're like, well, no, this is our view on the resource and we're going to stand behind it. So it prevents a kind of a chisel. And I think an acquirer coming in, if they've got a well-organized data set, being put together by good quality individuals, and they can look at it and find no fault or minor fault with it, it gives them a lot more confidence. So I think that's the first thing, is not to be looking to sell the business, run it properly, stand behind your work and do that. The second thing then, of course, is that if it's kind of known that you're a kind of a known seller, let's say something's got a value of 100. If you're a known seller, acquirer turns up and they go, well, listen, a bit of an issue here, a bit of an issue there. We're going to offer you 85, best you're going to do. And if you're a seller, you're like, oh, I'll take that. If you're not a seller, if you're an operator and you're going to stand behind your data you've done, someone says, well, it's worth 100. Like, yeah, well, we'd like to offer you 85 to 90. It's like, why would we do that? That's ridiculous. No, we're happy with what we've got. It's worth 100 to us. If you want it, you're going to have to pay 110. And I think that sort of puts you in that position of I don't say strength, but sort of lack of weakness. If you're very prepared to stand behind your numbers and you believe they're correct, and you're happy to keep running the business, I think that puts you in a good position when it comes to engagement with the other side. And I think, I mentioned earlier as well, is that at the end of the day, I don't own 100% of these businesses. It would have been very nice if I did. And as a management and board, you're there to work on behalf of shareholders and stakeholders. So I think within that process as well is that you've got to recognise that you've got to decouple what might be right for you personally as to what's right for those shareholders and those stakeholders. And I think that's really important, not to lose sight of who you're working for, and sort of make sure that you don't sort of you kind of get a bit blind to what you're what you're doing or what you want to do. Is that actually you've got to recognise that sort of the best outcome for shareholders might not be the best outcome for you personally. So I would say really solid underpinning of work that you're confident and you can stand behind and defend robustly. An operating model that you believe in, and will if you can't do the deal, that you carry on as you were, and then ultimately don't lose sight of who actually owns the business. I think sometimes that can happen, that managements do that. There would be sort of three things off the top of my head that I would say that sort of doing that, and you've got to get lucky. To be honest with you, there's got to be a willing buyer, willing seller. The commodity price cycle's got to be at the right point. You've got to have shareholders that are amenable to the transactions. They've ultimately got to accept it or not as well. And there's lots of times when things don't line up. There's two or three of the four things are there, but the fourth thing isn't. So you've got to recognise that these things come in. They don't always happen. Maybe they miss the first time, and someone comes back 6 or 12 months later, and it goes again. So I think not to be too anxious with it. Have confidence in yourself, and ultimately, if it's right, and it'll get there.
Yeah, and obviously yourself going through a few acquisitions. What's your view on the mining space at the moment within M&A? And do you expect to see more? Obviously, we're towards the end of 2024, but do you expect to see more acquisitions as we go into 2025 and further?
Yeah, look, I think it's really interesting. There's a number of things at play to my mind. Is so. I mean, fundamentally, a lack of exploration dollars. That pipeline of new discovery coming through. Getting the people out in the field doing the work and the dollars to do that. Where's that at? Where's that pipeline of new things coming through? I think that has been choked off or a little bit neglected, and that will have consequences down the track of that supply of new products coming through effectively sort of dries up. So that naturally then starts to push people towards if you think about reserve depletion, we're a depleting industry, is that they then look at acquisition as a way to sort of keep reserve quantum up as they go forward. So got to think about the interplay of exploration dollars versus acquisition for reserve depletion replenishment. I think that will continue to play out. I think then in terms of market scale, I think relevance of the sector. Bank of Montreal, one of our advisors, they have a little invitation lunch during London Metal Exchange Week, and despite being a gold producer, we got invited to it. And the lead banker at BMO here in the UK stood up and he makes this wonderful little speech, and he's basically there. Look, we've got everyone great, the good of the mining sector. We've got representatives from BHP, Rio, Glencore, Freeport, and goes right around the room there. And he said, look, all the great and the good of the mining sector are here, and I can tell you that within this room, there's over $850 billion of market capitalization at this lunch as we sit here. He said, but the really depressing thing is we've still got a combined smaller market cap than Tesla. And it's that when you sit there and you're sitting at this table, a little old Centamin at the end, and you look around this table, all the great and the good of the sector are there. And there's some tin pot fella in California making quite awful cars, and he's got a much higher market capitalization than all of those primary suppliers of that. It's quite astonishing. So I think that mining's relevance to those large investors, I think, is really important as well. And I think that from a liquidity perspective, bigger is better in terms of how does the sector stay relevant to attract capital. And that kind of links back to how do you get capital into those junior exploration plays. If the big boys at 50, 60, 70 billion, if they're struggling to get traction in North America, how are the rest of us going to have a chance as well? So I think that plays into it. Geopolitical risk, supply chain. I think lots of European and North American companies now, historically, we were very happy for other people to do the mining in difficult areas, other people to do the processing with environmentally sort of nasty processes, and we're quite happy to buy the final product. And I think that sort of geopolitical equations shifting now, and it's like maybe we want our own supply of nickel and lithium and tantalum and cobalt, and how does that work as well, and how do we think about that? I think there's a number of really interesting sort of factors at play here that says to me that I think that while exploration's cut off, we've seen a hollowing out of the mid-tiers, the bifurcation of the industry, the bigger getting bigger, the micro caps are there, the sort of the mid-tier space is kind of, being sort of subsumed as well. So I think we need to do something pretty quickly about it, and I would love to see that sort of emergence of the mid-tier. And it would be great if investors made some money along the way, because that will get them coming back and reinvesting. And it's a shame that Centamin's leaving London to go to New York, another UK company leaving the market, which is not great. But hopefully some people have made some money on the way through, and that'll encourage them to reinvest in the sector at the next opportunity as we go.
Yeah. As you prepare to obviously step down as the CEO, what do you want to leave as your legacy at Centamin? And also, I just wonder if there's any departing words that you want to give AGA as you go through that transition.
Biggest legacy was the new five-a-side pitch, Astro pitch, that I put in when I first joined. They all love Liverpool down there because of Mo Salah, so of course I named it Gold Trafford just to annoy them. But I think. Look, I think looking back on it, I think the solar farm was great. I think that was a really, good for the sector more broadly of what can be done in terms of decarbonisation. I think that sort of gender sort of engagement, I think that was a bit of risk there, but I'm glad that really worked out, and I hope that continues to sort of thrive and survive within that. I think Egypt's a lot more progressive than I certainly understood before I joined, and it's great to see that coming through. And I really hope that sort of, the work, it's not about me, it's about the work that those people did down there to, they're responsible for turning the asset around, getting it back on track and delivering increased output at a significant reduction in cost base in an inflationary period. The work that they did is what attracted AGA going there as well. And I think they're a great bunch of people. I made some really good friends there. And I think they've, I wish them all the very best. In terms of AGA, I've been really impressed with them. And I can say this freely now because I've left. And I owe them nothing, but certainly, when I engaged with Alberto initially, I dealt with Anglo Gold over the years many times, back in the Ashanti days, and the Gator acquisition, the merger. I've been a banker and a consultant around the edges of that. Had seen them through M&A, and I had the kind of view, historically, of this fairly sort of conservative, dare I say, slow sort of sort of beast that sort of trundled along there. And I found that the engagement with Alberto was very different, than the team there. There seems to be a lot more dynamicism, if I can get my teeth in, a lot more energy and urgency. They were very, very focused on closing this transaction. They did it in a very, very good way. I can honestly say we enjoyed the engagement with their team through this. It's very respectful and professional and engaged. And I think what Egypt's getting, what Sukari is getting, what that workforce is getting is a really good partner that I think is going to continue to operate the mine the right way. Same core values around safety, environmental performance and production. And I think there's a workforce there that's going to get the benefit of an international operations base that's going to help to develop them as well. So, look, Anglo will be fine. And I think Sukari deserves to be within a bigger portfolio. I wish them the very best of continuing to build on our work. I hope they get the exploration in Egypt up and running and make some success there. I think that'll be good for them and Egypt as well. And I think they'll be fine. I've certainly enjoyed my engagement with them. And it's a bit like kind of handing your kids over. It's always slightly bitter to hand them across there, but I think they're going to a very good home. So I think they'll be absolutely fine.
Yeah. And lastly, what's next for Martin? I suppose both in your career and in your personal life.
I think first and foremost, I probably owe my wife and kids a bit of FaceTime. I've been a bit elusive the last 6 months as we've been going through this. They may not want it, Rob, to be fair, but they're going to get it anyway. I am here a bit more now, so So that's fine. I've resumed my duties as commie chef of cleaning the kitchen down and doing all the legwork there. But immediate short term, looking forward to Christmas with and New Year with the family. I come from a big Irish Catholic family up in Manchester, all about the family, and that we're all going to get together. So I'm really looking forward to sort of getting sort of slightly less stressed and re-engaged with everybody. A couple of games of football and a few pints of Guinness, I think, on that. So that's the immediate short term. And then 2025. I'm 50. I know I look a lot older, but I think I've got one more in me. Certainly would like to sort of have another swing at something. Not going to think about that too much before next year, but certainly we'll think about sort of getting back in the saddle with maybe one more swing, and then sort of I think through to mid-50s, and then maybe a little sort of reduction in pace there with some non-execs or consulting work. But I think I've got one more executive swing to go. Commodity, location, project, TBC. But I'll park that until January, February. Then we'll have a think.
Yeah, I was just going to say, obviously you worked for a junior, now you've worked for a mid-tier. Is there a preference with whether you want to work for a more of a newer startup or more of established operation? And I suppose, what have you enjoyed the most? Obviously, startup rather than a bigger operation.
Look, I was very lucky to work with sort of the Beamer team before they became B2, when it was Clive Johnson and Mike and all those guys. I worked with them from Barclays days. I worked with a guy called Mike Kenyon and Jonathan Rubenstein, lots of success, Sutton Resources, Bullion Hulu, lots of things. And then you look back to the sort of, Dr. Bristow, sort of the Rangold experience. And what I took away from it, I enjoy working in small, flat structures of teams, sort of 5 or 6 key individuals in a flat structure. Everyone knows the dance card, everyone knows what they're doing. You can be quick, nimble, make decisions. You've not got huge sort of vertical, sort of integrated silos of decision making that are necessary in global assets, just to be clear. And I think I really do enjoy working in that small, tight, nimble team where you can sort of, make decisions in real time, move on them, and live or die by them as well. And I very much enjoyed that environment. So I would say that sort of next step, it's probably going to be something like that. It's certainly not going to be sort of running a multi-asset. I don't think it'll be running a multi-asset business. That doesn't sound too attractive to my personal style and preference. I do prefer that smaller opportunity. But those smaller teams, have done very well. Endeavour was a great model of that, went on a great run, obviously, in terms of, again, a small flat structure. So I think Rangold, I think Beamer B, I think that type of sort of, management structure was what we had at Centamin, what we had at Toro. That's what I enjoy. So it would be something like that. Listed versus private equity. Pros and cons of both. That's another hour on its own there, right, Rob? We'll have to park that one for another day. Would be amenable to both. But yeah, certainly small team, sort of working in that environment. I think that will something be along those lines for sure.
Yeah, great. Martin, really appreciate your time. Thanks for obviously sharing your journey, telling us obviously about Centamin, and obviously the recent acquisition, and obviously what you've done to change the business to obviously be acquired by Anglo Gold Ashanti. And if our audience wants to reach out to you at all, if they've got any questions or need any help, how can they go about doing that? What sort of social media platform channels are you on?
I do have a LinkedIn account, which I wasn't that active on, to be honest with you. But I've now that I've sort of stepped away from Centamin, you can find me on LinkedIn. I think I'm the only Martin Horgan in the mining sector, so should be relatively easy to find a picture of my ugly mug in there. And obviously, people can reach out via the in-mail function there as well.
Yeah. And I won't ask you about any other social media platform channels, whether you're on TikTok or anything like that.
No. I'm a bloke in my early 50s. I'm sort of fairly sort of. I remember looking back at my father years ago as he struggled to work the video recorder, and as a young man, I was like, bloody hell, Dad, I've become that man. So no, I'm just on LinkedIn these days.
I'm exactly the same. So I know what you mean there. My kids know more than me, so
exactly.
I'll leave it at that.
Let them crack on.
Yeah. Well, Martin, all the best for have a good festive period. All the best for 2025, whatever you will continue to do. And obviously you've done remarkably what you've done with Centamin and Toro, and wish you obviously all the best in your next venture.
Thank you very much, Rob. Lovely to talk to you again. Don't leave it 5 years next time.
No, certainly not. Certainly not.
Thank you.
Thank you for listening. Hope you enjoyed that episode. As always, appreciate your continued support. Please keep sharing these, obviously, episodes far and wide. And to people outside of the mining industry, not just in our mining industry. We need to we need to really, I suppose, improve the brand of mining and make people understand what mining is all about. And it's not dirty faces, a dirty industry. There is a lot more to it, and we can only improve the image of branding by sharing these episodes to people outside of our industry. So thank you for listening, and until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes, and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.